Good morning and welcome to Storm Stock Solutions. I'm Grant Mercer. With the opening bell just ahead, let's bring some clarity to the chaos in today's markets and set you up for the trading day. The story drawing the most market-focused attention this morning is in crypto and fintech. According to reporting from MarketWatch, Circle Internet, the issuer behind one of the major stablecoins, is seeing its stock soar after it reported a big jump in fourth quarter profitability. That's notable because stablecoin players are often treated as plumbing in the crypto system. When the plumbing prints strong profits, it tells you there's meaningful transaction volume and fee revenue underneath the surface. We don't have a big macro data print or Fed headline dominating the tape right now, so individual stories are doing more of the heavy lifting. Expect traders to key off corporate news and sector themes rather than one big top-down catalyst at the open. On the opportunity and strength side, that circle move puts a spotlight on the broader picks and shovels side of digital assets. The infrastructure names that make money on volume rather than pure price speculation. When a stablecoin issuer can show a sharp jump in earnings, professionals will be asking, is this a one-off from high yields on reserves or a structural sign that usage is growing? If the market decides it's the latter, you could see renewed interest in payment platforms, on and off ramps, and other firms that touch stablecoin flows. Even so, this is a space where sentiment can flip quickly. A hot open in a single name doesn't erase the regulatory and liquidity questions that always hang over crypto-adjacent stocks. Interestingly, that same Circle story also shows up as a risk flag. When a stock soars pre-market, short-term traders know they're dealing with a wide range of possible outcomes once real volume hits at 9:30 Eastern. Gaps up in high beta areas can invite profit-taking, sharp intraday reversals, or just plain volatility. This is one of those handle with care pockets of the tape. Traders will be watching order flow and liquidity very closely. Beyond crypto, MarketWatch is highlighting a few under-the-radar setups that could matter more as the day develops. First, global banking. HSBC just posted what's being described as a beat and a raise, and has now leapfrogged Wells Fargo by market cap. The bank's guidance for 2026 is strong enough that analysts are nudging their price targets higher, roughly in the mid-single digits. For U.S. investors, this isn't just a foreign bank story, it's another data point in the long-running question. Which business models in big global finance are best positioned for a world of still elevated but potentially plateauing rates? If more international banks keep out-executing some U.S. peers, we could see a gradual re-rating across the global financial space. Another theme to watch is in software. A piece on MarketWatch profiles deep value investor Lee Roach, who says he's looking at beaten-down software stocks like telephone directories for the first time ever. The idea here is that after a brutal derating, some software names might finally resemble classic value situations rather than just expensive growth stories. That doesn't mean everything in the group is suddenly attractive, far from it, but it signals that some pros are at least willing to dig through the rubble. If that mindset spreads, you could see selective bottom fishing in oversold enterprise and application software names. There's also a subtle but important story about corporate leadership and communication. Another MarketWatch piece notes that more CEOs are taking a page from Elon Musk and speaking directly with customers on social platforms, town halls, and live streams. Executives say it's about learning to run their businesses better. Skeptics call it PR. For markets, the key question is whether this direct communication changes how fast sentiment swings around earnings, product issues, or controversies. A CEO who's constantly online can move a stock's narrative in real time, for better or worse. Stepping over to consumer and housing-related names, MarketWatch reports Lowe's shares dipping after the company warned of ongoing uncertainty in the home improvement category. That choice of words matters. It echoes a broader concern that while housing has seen some stabilization, the big-ticket discretionary spend tied to home projects remains fragile. Traders will be watching how that comment bleeds into the rest of retail, housing suppliers, and any names tethered to the renovation cycle. And one more watch list theme: small caps and microcaps. Mark Hulbert at MarketWatch points out that the Russell Microcap Index has been surging, even though roughly 57% of its members lost money last year. Historically, those kinds of rallies driven by unprofitable names have not ended particularly well. Professionals may see this as a classic late-cycle style dash into speculative corners of the market, an area where risk can build quietly before it shows up loudly. If volatility picks up, this is likely to be one of the first places stress emerges. Around the edges, there's a run of personal finance and retirement stories trending. questions about early retirement with a few million saved, or disputes over estates and assisted living costs. Those don't move the indices, but they do reflect the mood of individual investors. Cautious, focused on longevity of savings, and sensitive to inflation in services like healthcare and housing. That backdrop can influence how sticky flows into equities and funds remain over the medium term. So as we head into the open, the board looks like this. Crypto infrastructure names in the spotlight on strong earnings, microcaps flashing a speculative signal, global banks like HSBC quietly executing, software attracting new value-oriented eyes, and consumers' home improvement commentary sounding a bit more cautious. I'll be back with intraday updates once the market is underway, helping you track how these early narratives actually trade once real volume hits. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Stormstock Solutions, I'm Grant Mercer.